Splendid evening it is to you viewers. Welcome to Equity News right here on Equity Access, your aerial perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast from our Hampton studios in Harare. I'm Ibn Mabunda. Let's get on to business. The NMB Limited has launched a near-field tech card which it says is a first on the market. The NFC, which was released onto the market earlier this week, will process low-cost transactions below $100. The bank also recorded a 17.5% increase in its transactional volumes between February and April of this year. The bank opened a service center in Chitungwiza and is looking to open another in Victoria Falls. This was revealed in a trading update at an annual general meeting held in the capital this afternoon. The Chief Executive Officer Washaya gave the update. Let's have a look.
Resultantly, our net interest income and non-interest income for the 4 months to 30 April 2018 were 7.2% and 21.6% below budget, respectively. Our operating income for the 4 months to April 2019 was 22.7% below budget. Given both the improved transactional volumes and the revision in service fees and interest rates, we expect to close this gap in Q2. Our net US dollar asset position at 30 April 2019 resulted in a translation gain, and hence our total comprehensive income was above budget. Operating expenses for the 4 months to 30 April 2018 were 13% below budget. However, year on year, the operating expenses increased by 36.7%.
Just in, EcoBank and Stewart Bank are now among the top 5 banks according to an Equity Access banking sector report, and this is according to a banking sector report. Just a quick look into the stats. CBZ has assets worth over $2.1 billion, Stanbic just below $1.8 billion, KEBS just below $1.5 billion, EcoBank now, which is at about the $1 billion mark, while Stewart Bank is just below $1 billion. We'll get into the teensy-wincies thereof when we get into the news review, so you don't want to miss that. Meikles issues a further cautionary statement indicating interest to dispose of some of its assets. The decision is subject to shareholders' vote at an EGM, the date of which is set to be announced. Cassava's Vaya reaches 10,000 driver partners as well as 100,000 rides weekly. The Vaya app, which is akin to Uber, Grab and Didi, was launched late last year. Cassava was listed on the Zimbabwe Stock Exchange in December of 2018 as an offshoot of Econet with a focus on smart technology. The new Minister of Energy and Power Development vows to go after malperforming state-controlled enterprises in his department. This comes as the nation grapples with severe load shedding as well as fuel shortages that are crippling the country's economic progress. This morning he engaged Zera on how to address fuel concerns. This would be the minister's Twitter account, and these are some of the statements that he actually said. And here he says, with reference to what actually has been taking place on the power sector, he says, I've had discussions with Mr. Sakala of the IDBZ concerning Osborne Dam project. We need to expedite execution of all projects. A more detailed update will follow on this and other projects. And then he then says at the bottom here, yesterday I had my first contact with the fuel industry. Meeting was in response to their request to give me their response to the new fuel prices. So quite some exousia there that the minister is running with. Let's hope that we'll see positives with regards to that. This concludes our news bulletin. More to follow in our evening news review. Don't go anywhere. Welcome back, viewers. It's now time for news review, and with me is Equity Access economist Tinashe Kaduo. Tinashe, good evening and welcome to the show.
Good evening, Eben. How are you today?
Can't won't complain. Should only get better yourself.
I'm very well.
Splendid. Let's cut to the chase. We'll start by diving into NMB, which has launched near field tech card, which it says is the first on the market. But key to the trading update presented by the chief executive officer is the fact that the interest income is down, so is their non-interest income. At the same time, we also did allude to the fact that prior to the 22nd of February, there was a lack of clarity with regards to policy, so they were a bit hesitant in terms of action. They weren't sure what exactly to implement. At the same time, their operational expenses in the first quarter were 7.5% below their budget. However, on a year-to-year basis, they were actually 36% beyond that budget due to inflationary issues. What is your comment with regards to the trading update?
If you look at what has been happening in the economy, especially during these first 4 months of the year, 2019 started at a very slow note, and you have seen so many disturbances. In January, we had those strikes when people were responding to the hike in fuel prices. That alone disrupted businesses. Then there was the currency issue, where every economic agent was very much uncertain on which currency the economy is using. It also actually affected operations as well. Then you also look at the issue to do with high inflation and unchanged. Most banks, they didn't change their pricing, and they started changing their pricing in April. So the prices they remained fairly the same in the first 4 months of the year. So the effect of that, maybe we'll start seeing it May going forward. So most banks actually started to adjust their prices. Most of them they are saying it's effective June, and I think NMB might be also falling in that category as well.
Definitely.
So I think their income will start to seeing it responding positively in the second half of the year, or the second quarter of the year going forward. But of note, there is their operating expenditure, which went up 36% year on year. If you look at 36%, it's actually a positive development if you consider the level of inflation. Inflation right now is above your 70%, depending on which measure that what you are using. If I want to use Professor Hanke's inflation measures, we will be talking of inflation above 200%. If you use the producer price index, you will also be talking of inflation above 200%. If you use the CPI, maybe that's where we are talking of inflation which is below 100%. But looking at 36%, it means that it's a bank which managed to contain costs, and it's actually positive that way. And if they continue to contain costs into the whole year, I think maybe even their profitability might remain the same when compared to last year's level, or might be better. Then of note, what you said about that low cost card, the NFC card that they have recently introduced. If you look, what they are trying to do is to manage those low cost those low amounts cash withdrawals that were being demanded by most of the public. If you look at the general public that use public transport, they really need cash to pay for your combi fares and your bus fares. So they actually need that those low value transactions. So I don't know how NMB would convince the transport operators to have devices that will enable that card to transact in your combis and even in your low cost transactions. But if they have a proper strategy to penetrate that segment of the market, I think it will be something that will boost their non-funded income, or actually improve in terms of their customer numbers.
But perhaps maybe before we can talk about them actually seeing an increase with regards to their income, I think maybe there would actually be need for sufficient investment in the sector, because I like to imagine you have to get to a combi or in those ride sharing vehicles, popularly
and a lot
referred
of
to
marketing
as.
and a lot of marketing expenditure as well, in terms of that, to educate the general public that yes, there is this card that indeed works, and that will actually help, in terms of convenience, in terms of those low cost transactions.
Beautiful. Now let's get into the equity access banking sector report. EcoBank and Stuart Bank now among the top 5 banks by assets. Would you want to shed more light where that is concerned?
Yeah, if you look at EcoBank and Stuart Bank, they've been, more aggressive in terms of investment in digitization, and it's actually, paying off. And if you look at their performance over the past years, if you look at Stuart Bank in December 14, it had, a balance sheet of around 164 million, which was actually, below that of Metbank. So in terms of ranking, in terms of the total assets, in 2014, Stuart Bank was around, position 14 or so. Then EcoBank, which acquired the Premier Bank in 2010, if I'm not mistaken. If you look at December 14, it had, a total asset sheet of 157.9 million, which was actually, and it was also ranked around, 15th. But if you look at that, those banks, they've, grown massively, and now they have overtaken, the normal giants, your Standard, your First Capital Bank, your FBC, and now EcoBank is ranked third. It's ranked fourth, while Stuart Bank is ranked fifth. But if you look at the growth in terms of year on year, there was a huge jump of closer to 100% in terms of that total assets, and Stuart Bank also with almost a similar margin. What actually drove, especially Stuart Bank's balance sheet is its investment or its aggressive, penetration into the lower end market, your retail mass market. So if you look at it, it's actually now the largest bank in terms of number of individual customers. Then EcoBank is actually riding on its stronger parent, which is your EcoBank Transnational, and it's one of those few banks, or if I may say, one of those Pan-African banks, which is actually offering correspondent banking relationships, especially even to those indigenous banks here in Zimbabwe. It's actually a banker to some of the bigger giants in the market, which are actually in the top 5 as well. But this is actually a positive for those banks, and I say congratulations to them.
I realize. Well, maybe you'd want to explain this graph just very quickly before we move on to our next story.
If you look at this is a graph which is showing your market share trends. If you look at 2014, 2015, EcoBank and Stuart Bank, they were not in the picture in terms of those top 5 banks by market share. Those banks that used to dominate were your CBZ, Stanbic and CAPS. CBZ enjoying a massive 25% market share, whilst Stanbic had 9% and CAPS at 14%. But now with the coming of EcoBank, we are seeing CBZ's market share under pressure, under threat, now at 16%. But Stanbic managed to maintain its market share because it's a Pan-African bank and it's leveraging also on its parent, and it's also one of those few banks that are able to meet the banking public's foreign currency needs and also foreign currency payments in a timely manner. So if you look at it, it has managed to maintain its market share at 13%, whilst that of CABS, which is more of a local bank, has come down from 16% in 2015 to 11%. Stuart and EcoBank now, they are enjoying massive market share growth, and now they're at 7%, and I foresee them overtaking those traditional giants in terms of market share.
Beautiful. Meikles is seeking to dispose of some of its assets. Of course, this is not the first cautionary that they've actually issued. I think it's maybe the third or the fourth cautionary. But what do you think we could actually see playing out here?
For Meikles, I wouldn't want to speculate much, because I think it's something that is much more internal, which hasn't been published, on the public domain. But I think it's a bank, it's a company which is trying to maybe try to consolidate or to reduce its exposures in terms of certain segments of the economy that maybe they are seeing is underperforming.
I realize now the issues that are affecting the country, fuel and load shedding, and we seem to have quite a zealous new minister who's hands-on, taking the bull by its horns, engaging Zara to look at how we can address fuel concerns. What is your comment with that? Is very briefly.
A lot of engagement is actually needed, especially the minister actually has to be on the ground and try to understand what's actually transpiring on the ground. The issues of cartels, people that controls the fuel market, if it's true, I think the minister might try maybe to advocate, for certain, maybe I might say for even an active price commission that will look at eradicating or removing those cartels. But when I'm saying price commission, I'm not advocating for price controls, because most people, they mistaken that if they hear of price commission, they just think about price controls. But a price commission, it's actually an institution that understands what's happening on the ground, how market players are. How market players are determining, the prevailing prices. If you look at most markets in Zimbabwe, and specifically in most developing countries, they are very weak and they are controlled, by few players, and they are easily manipulated. So if what is happening on the ground is that if the fuel market or any other market is being controlled, by those cartels or their sort of, manipulation, I think we really need that price commission to remove, such controls.
Well, thank you, Tinashe, for the perspectives. Thank you, viewers, for watching. Up next is a focus on the stock market. Don't go anywhere. Welcome back, viewers. It's now time for Markets Daily. With me is investment analyst Anesu Chimbuma. Anesu, good evening and welcome to the show.
Thank you, Eben. How are you doing today?
Awesome. Yourself?
I'm all right. Thank you so much for asking. Well, before you stop me from saying much, the all-share index today did come up 3.13%. The market did perform on pretty well today. Had a very huge jump again today. Coming up to 154.86 points for the all-share index, that index pretty much covers all other counters that are on the stock market, while the industrials index did add 3.19% for it to settle at 517.77 points. The minings index did drop 1.62%. That was consequent to a 6% decline in Bindra nickel today. That pretty much dragged down that index. The top 10 index was the strongest performing index today, consequent to about 8 counters that were in the positive today, leaving out 2 counters to be which were stable, which are BAT and Netfoods. Those 2 counters have been pretty much stable for quite some time now. The heavy movers within the top 10 index today were again Econet and Cassava. These guys are scheduled to release their financial results by the end of this month on a regulatory basis. Now, these 2 counters are very interesting for me because prior to Econet unbundling Cassava, Econet had most of the operations that Cassava are products rather that are under Cassava under them. Now, at that time, Econet was trading at around about 100 and 120 cents, around about that much of value. Now, since then, they did unlock a lot of value, and both counters combined do boast of about 300 cents plus there in terms of value that they do have together. Now, InScore did come up 2.08%, while Old Mutual added another 2.94%. Just to quickly move on onto our trend, we do realize that the all-share index is up 6.32%. Mining's index has trended down that gain there to about 1.18%, consequent to today's drop of 1.4%, while the top 10 index is up 7.25%. Quickly moving on to our rises and fallers, the market did have about 28 counters that traded on the stock market. 19 were bulls and 4 were laggards. Among those bulls was the best performing counter of the day, Willdale, that led that pack of bulls by moving up 19.15% for it to settle at 2.8 cents. It is a penny stock, so any slight movement would cause for a huge percentage jump there. FML selling at 16 cents, while having added about 17.13% on prior sessions value. Now Ariston is up 10.5%. Me and Respect did talk about Ariston a little while back. It is accounted potential. We did think that it was still very much underrated. It has some very impressive products under years of operating losses prior to last year's performance, where they did come out of the red and into the black. Now FMP and Cassava did cap the set of top 5 risers, while Dairy was the weakest performing counter, coming off 15.48% for it to settle at 16.05 cents, while Meikles, who did issue a cautionary statement today concerning one of its assets that they look to sell off today. Earlier on in the day, we did talk with a couple of guys in the office about which assets could probably be turned off by Meikles, and we did assume that maybe Cape Grace, as it is one of the outlying hotels among their hospitality within their hospitality portfolio. Meikles does have other portfolios. Interestingly, it is also in retail with the TMP Pick and Pay brand under that. Also, they are into agriculture with Tanganda under that, which is a flagship of their agricultural sector. Now Bindura, like I did mention, did drop 6.25% for it to settle at 6.4 cents, while Simbisa capped the asset of laggards today, settling at 90 cents after having dropped about 1.06%. Now, prior to Cassava entering into the top 10 into the top 10 stocks, Simbisa was among those. So it is now down to number 11 in terms of biggest counter on a market capitalization basis. Now, for our forex market, Old Mutual implied rate did weaken to about 6.86, resultant to a huge drop on the stock exchange in Johannesburg, while the Zim Stock Exchange did go up, which then actually increased the disparity between the two. The parallel market is almost mimicking that, coming up to 6.8 as well. Well, there have been trades today ranging in the range of about 7.3, 7.4 thereabout, which has caused for that market to actually also weaken to that about rate. Now, the interbank rate did strengthen a little bit today to about 4.5 up from 4.63 yesterday. There could have been a little bit of improvement in terms of the volumes that were traded yesterday. We did talk about an average amount that is around about 2.3 million on a daily basis that has been traded since the $500 million was mentioned. But then prior to that, we also had already been trading at around about $2 million on a daily basis on that interbank market. So that difference may have caused for that strengthening, but then it is still within the same range of trades since the promulgation of the interbank rate. So there hasn't been much movement in terms of volumes as of yet. We are not very sure as to to and when these the 500 million is supposed to be injected within that market. I suppose it will be coming along with the new rules that have been purported to be set out for that market in the near future.
Well, thank you, Anis, for the perspectives. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website www.equityaccess.net. A splendid evening it is to you, viewers. Welcome to Equity News right here on Equity Access, your aerial perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast from our Hampton studios in Harare. I'm Ibn Mabunda. Let's get on to business. The NMB Limited has launched a near-field tech card which it says